Thanks, Kelly. I think the key right now, as we've spoken about in the past, is to find companies that are profitable, to find companies with earnings consistency, cash flow momentum, and probably the fourth characteristics we're focusing on is pricing power. Now, I know most of the narrative is about growth or value. The interesting thing is coming into Q4, they were about neck and neck. They were both up about 19-20% for the year. Values pulled ahead a little bit in the fourth quarter, but I do think we're at the point in the cycle where economic growth is likely to modestly decelerate. We're going to see some moderation in financial accommodation when this is less about making a big style bet and more about stock picking and finding companies that can maintain pricing power as margins are under some pressure.
And it's interesting, Russ, because that echoes, just yesterday, I think we were doing a segment that featured companies with pricing power and, that idea of kind of looking across sectors. Do you kind of just ignore a lot of the macro variables? So a lot of people say once the taper's on, forget, market's going to fall apart. Or they say bond yields 1.6%. That's the biggest factor. I mean, can you kind of ignore all of that if you're just looking for kind of the stocks with those strong characteristics?
I don't think you can ignore it, but I think it's been overplayed. And, Kelly, this is a great question. I mean, all the narrative in September was about rates. And it's not like rates didn't have an impact on markets. They certainly did. They certainly impacted the type of company that people preferred during the month. But it was interesting, if you go back and you look at September, and you just do a very simple exercise, days the market was up, and compare that to bond yields, there was virtually no correlation. Now, again, that's very simplistic, but it illustrates the point. Whether the 10-year is at 140, 150, or 160, which is basically the moves we've been talking about, is not as big of a driver as a company's ability to generate earnings, generate cash flow, and maintain margins. So as long as we're in this range where the 10-year is bouncing around these levels, we've got a very strong economy, but the second derivative is slowing, I do think it's going to be more about stock picking and about focusing on earnings. And it's worth pointing out, unlike 2020, this has not been a multiple-driven market. It's been an earnings-driven market. That's where I think the gains are to be had.
So, Russ, I've heard several investment folks say the same thing. Don't focus so much on growth versus value. Focus on quality. And I wonder how, and I think you really just referenced it, how you define quality. If it's a stock picker's time, what is a quality stock? What are the attributes of it? And if you so choose, I'd love to hear you name an example or two.
All right. Well, we'll do it at the industry level at least. So, look, Taylor, it's an important question because quality is a very amorphous style. It means different things to different people. When we talk about quality, we're really focusing on those characteristics that have been and we think will continue to be rewarded by investors. So what does that look like? It looks like cash flow momentum. It looks like earnings consistency, the ability to deliver earnings in a very consistent fashion, even when the economic environment is not as friendly. And then finally, again, I keep coming back to this, but it's increasingly important with all of the supply chain disruptions we're seeing, all of the increase in input costs. Can a company pass those on to the end consumer? That's where we see the best opportunities today. Now, where are we finding that? We're finding a lot in the consumer discretionary space, in parts of retail, in media, in cable and entertainment. These are areas that we think can maintain pricing power. On the cyclical side, large parts of the industrials, manufacturing, in technology as well. There are a number of places in technology, whether we're talking about semi-cap equipment, we're talking about parts of software. We see the ability to maintain pricing power. These are the companies, these are the areas we think are going to outperform through year's end into 2022.